Good afternoon, everyone, and welcome to the first edition of the annual RankiaPro Europe Awards ceremony. We are excited to be here and to have been given the opportunity to acknowledge some of the asset management industry's most dedicated and successful professionals. 2020 was a challenging year for everyone in so many different ways. The global COVID-19 pandemic turned life as we knew it upside down. Above all else, the RankiaPro team hopes that you and your loved ones have stayed safe and healthy. We also know that transitioning to work from home full-time was a challenge, either because you had to deal with children constantly interrupting Zoom meetings, or because you had to temporarily turn your kitchen table into a makeshift office desk. You all deserve a reward for adapting and successfully maintaining your sanity, most of the time, as fund professionals during a year where the markets certainly took us for a ride. Ideally, we would love to be hosting this RankiaPro Europe Awards ceremony live with all of you in attendance, and hopefully we will be able to do so for our next year's edition, but we are glad to have you all join us for this first digital edition. The 3 awards we will be announcing today are 1. Fund Manager of the Year, 2. Sales Manager of the Year, and 3. Fund Selector of the Year. These 3 categories are part of our monthly Professional of the Month interview series, where we interview and present a different fund manager, sales manager, and fund selector on our website to our readers. At the end of the year, the 12 professionals in each category are eligible for the Grand Category Award that we will announce shortly. In terms of how the winner is selected for each category, we open the polls to you, the public, and allow you to cast your vote for a 1-month period, as I'm sure many of you have done in the past weeks. We've received over 1,000 votes for each award category, so thank you for your participation. In addition to the public voting, we consider the traffic the interview received on our website and the reverberation via social media, such as the engagement on LinkedIn. We combine these 3 measures into a single weighting to obtain a final score that we use to determine the winner. This awards ceremony is uniquely special as it highlights the professionals who were successful in adapting to our new environment while maintaining the high standards required to work within the asset management industry. So I believe I've built up enough suspense. Let's begin with the awards. First, the Fund Manager of the Year. Active management comes to the forefront in adverse financial market conditions, such as those we experienced in March. A good fund manager must anticipate volatility and manage downside risk as he puts together a portfolio consistent with the fund's objectives through measured capital allocation. Without a doubt, the 12 nominees in this category have done an admirable job in the face of coronavirus. The 3 finalists in this category are Noura Lakonen and Juhamati Puka from Evli Fund Management, Nina Lagron from La Française Asset Management, and Cyril Beignet from Pictet Asset Management. And the 2020 RankiaPro Fund Manager of the Year Award goes to Nina Lagron from La Française Asset Management. Congratulations, Nina. We're joined live by her now in Paris as she accepts her award.
Hello from Paris. I'm personally very touched, and we are, as a team, extremely honored by this award. I'm not hiding to you that 2020 has been challenging, but we have a very robust setup operationally within La Française Asset Management. but more particularly within our research and combined work. As you might know, we are working hand in hand with our extra financial analysts on every single stock we pick and on the way we construct our portfolios. Our Carbon Impact Global Equity Fund has had a very good year with nice outperformance. This is coming from the two categories in our fund. The first category being transitioning companies. These are very large cap American companies, European companies, global companies, which have currently a relatively high carbon footprint, but will reduce this carbon footprint very quickly and are working actively towards this. This category has really added some robustness to the fund, particularly whilst the markets were falling. In addition, our second category within the fund, which we call the enablers. Enablers are companies in the industrial space as well in the tech space, which are giving the transitioning companies the technological means and know-how to reduce these carbon emissions. And these companies typically have very superior growth to their peers in the sector. And this category has added really additional growth, particularly in the recovery period. I'm as well really happy to tell you that a third relatively small category in our fund, which we call solution providers. These are companies in the green energy space within renewable energies. The fund has contributed to the financing and funding on production of a large chunk of avoided emissions. This means that the fund has financed as well going forward avoided emissions, which means electricity being generated without additional CO2 output. So again, thank you very much. We are very honored.
Thank you, Nina, and congratulations again to you and your team. Next up, the Sales Manager of the Year. In a profession where client relationships are top priority, 2020 forced sales teams to adapt and get creative in how they connected with current and future clients. We know that it has not been easy, and RankiaPro is proud to be your partner in this journey. The three finalists in this category are Gunnar Knierim from Alliance Bernstein, Renato Guerrero from Candriam, and Charles-Henri Herman from Janus Henderson. And the 2020 RankiaPro Sales Manager of the Year award goes to Charles-Henri Herman from Janus Henderson. Congratulations, Charles-Henri. We're joined live by him now in Paris as he accepts his award.
Thank you very much. That's a great news. I really would like to thank RankiaPro for this award. I'm very proud of this prize, but I think that clearly this is a team prize. I mean, it's a Janus Henderson effort, and especially with our France and Benelux team on the distribution side. I would like to thank my team because I think it's due to their fantastic effort to provide the best client service for our clients. Of course, in this very difficult period that we all had in 2020, we tried not to overload our clients with too many emails, not to harass them, but just to provide them the best information we could in a very timely manner, and to be very present when they needed our help, but not trying to read James too much, because I think it was a very tough period working from home. So I would like really to thank our client for this fantastic recognition for our team. I think I'm just the image of the team, but the team made a fantastic job. We've got a great company which tried to focus on the client's priorities, and I think this prize recognized the effort at the group level. So thank you to Rankia, thank you to our client, and thank you for the team.
Thank you, Charles-Henri, and congratulations again. And last, but certainly not least, the Fund Selector of the Year. The combination of the art and the science involved in fund selection provides for a challenging but rewarding opportunity for fund selectors as they perform their fiduciary duty as capital allocators. The three finalists for our Fund Selector of the Year are Stefano Torti from Bank Haviland, Christophe Jobert from Mediolanum, and Mia Soderberg from Munich Re. And the 2020 RankiaPro Fund Selector of the Year award goes to Christophe Jobert from Mediolanum. Congratulations, Christophe. We're joined live now by Christophe in Dublin as he accepts his award.
Good. Thank you very much, Rankia. I'm very proud in my name and in the name of all the team to receive this prize. I know it's a very difficult environment these days, and we're forced to do that via Zoom or via MS Team and work a lot like that. So first of all, I want to thank a few things. First is a decision that I was taken many years ago. I think it's more than 15 years ago by the CEO Massimo Doris in Banca Mediolanum and the CEO of Mediolanum International Fund, Furio Pretty to launch an asset management based in Dublin, and believe that that was the right decision to do. And so now today we are 120 people based in Dublin, managing 43 billion of assets for Banca Mediolanum clients. So that's the first one that I'd like to thank. The second one is obviously the investment team, because this prize recognizes the work done by a team. It's not on one individual, it's a teamwork that is important to recognize. And the investment team based in Dublin is of 40 people, a bit more than 40 people. And half of that, 20 people are dedicated to multi-management, because we do as well single security investment, direct investment. That has been a few projects that we run the last few years. So that's thanks to them and the hard work they've done, in particular over the last 3 years, working with me in managing all these portfolios, 43 billion of assets. And the last one I want to thank is the family banker, because based in Spain, Italy, and Germany, they do an incredible work for us, facing the clients. We know that managing money is difficult, but facing the clients is even more difficult. So I want to thank them a lot for the hard work they do, and helping us to focus only on investments, which is the objective of Mediolanum based in Dublin, managing 43 billion. So thank you all of them, and thank you again as well, Rankia, for organizing this event. And I'm very proud to take that prize for all the team.
Thank you, Christophe, and congratulations again to you and the whole Mediolanum team.
Thank you.
Since we have these three award-winning asset management professionals with us live, we couldn't pass up the opportunity to host a short roundtable discussion on the investment landscape in 2021. With the diversity of expertise between the three of you, we are certain the questions we have prepared will result in an extremely insightful discussion for our live audience. So let's get right into them. 2020 was a record year for index fund inflows, and with markets continuing to climb, I imagine that 2020 has so far been much the same. So I'd like to start off with a question about ETFs. Christophe, will ETFs continue to gain speed or not? And what factors do you believe will influence the ETF landscape in the medium to long term?
Yeah, no, thank you for the question. First of all, yeah, the ETF, it's obviously a cheaper option for investing. So it's a quite easy and for investors to access to ETF. The other benefit of them is that it's quick to implement for example, tactical asset allocation. In some case, when we want to be exposed to a specific factor and we don't have a view over the long term, but it's very maybe short term or medium term, we use ourselves some ETF to be able to do that. But having said that, if we take a bit of a longer term view in this kind of situation of markets, first of all, last year some active managers did a better job, and we've seen that in Europe, for example. Is that in other region, emerging market as well. We've seen that in the hedge fund industry as well, which is in a way the most representative of active manager. You've seen a extremely good performance of some strategies. So we think that the active manager will, in this environment of market, we think active management should be able to do potentially a better job if we give them time to do that. And in particular, in that market, if we foresee, and that's what we see, that we will see a broadening of the market away from large cap tech name, for example, and more a broader participation within the market. We think that active manager should be able to provide as well an interesting performance. So I think it's not a ETF versus or passive investment versus active investment. There is a role for both. And at Banca Mediolanum, it's an international fund, we strongly believe that active management over the long term should provide interesting performance adjusted of the risk that is taken.
Yes, thank you. I do certainly think that passive investments will play a role in portfolios, whether it be small or large. Charles-Henri, what feedback have you received from clients regarding the demand for ETFs in Paris?
Well, I think that what Christophe just said is a good analysis of the market. So I would agree in what we said. I mean, this was a record year, yes, because we had a very volatile market. So clients had to react very actively to what happened with this crisis, right? So when you want to be very active and quick to invest or disinvest, then you have to use ETFs, which is the easiest tool, or futures or options for this type of tools, where I think that on the long term, 2020 has proven that active managers were able to provide a much better performance than indices or passive management. I mean, we at Janus Henderson, we are mainly known as an active boutique. And if you look at our performance across the asset classes, you can see that we have outperformed very highly, especially in certain asset classes. So clearly, I would agree with what has been said. I think on the short term, yes, there is interest. I mean, our investors are combining investment into ETFs for the short-term tactical play, but they are also investing into long-term vehicle like funds and active management to outperform the market. I would add maybe something which is interesting, that we do have an ETF range, but this is active ETF that we do manage, and we are trying to design active, enhanced beta or thematic ETFs. The idea of this is to continue to reach, I mean, the goals of our clients, which is a growth of capital, not correlated to the markets, and with some income. And I think that passive benchmark ETFs won't provide this to clients. That's why I think active ETFs or active managers will enable to provide much better alpha on the longer term.
That's great insight. Thank you, Charles-Henri. Now, for the second question, there has been a lot of talk that 2021 will be the year that we will see a big turning point in ESG in the asset management industry. Nina, I understand you were responsible for La Française's carbon impact equity strategies. What tangible changes do you see coming this year in the ESG space?
I think the most important change, and if I may actually already relay this to the former question, is actually the integration of ESG into investment management. With ETFs, which have there are ESG ETFs, you have been able to apply the simple best-in-class ESG approach. However, what we have seen last year is that the integrated approach, which is the approach taking into account the effect of looking forwards dynamically in the integration of your investment management, this cannot be handled by ETFs. And this is something which is very important when you have to decide over a management or an investment over the medium term where you want to have a positive impact. And I think these are, this is one of the main points we are going to see over the next couple of years, but it will be crystallizing next year or this year already. We have 3 points. First, we have EU regulation with, let's say, the EU taxonomy really coming into play. By the end of 2022, all funds need to be aligned and need to be way more transparent. We are asked as well as fund managers to really be more transparent what we actually want to, are we actually playing within ESG, if it's just a marketing gimmick or if it actually really has an impact. Other regulation is way more important as well as carbon taxes and the polluter payers principle fall into place, which means that sustainable investment is a way of avoiding additional costs or loss of additional alpha. The second point is a change of behavior. I mean, the current crisis, the pandemic, has made it very acute that there are crises which are unforeseen at certain points in time. And the climate change is one of these crises which starts to be being priced in. It becomes in way more acute, and risks like stranded assets or additional costs need to be taken into account today. And investors are understanding that that this really is an important point to take into account in addition to pure financial and strategic analysis. And the third point is as well that ESG funds, for the first time in a long time, have really shown additional alpha. Beforehand, with former best-in-class application of ESG, it was very often a cost to performance. It has become more and more a way of generating positive alpha. So these 3 points are definitely opening the way for sustainable investments in the future.
Great, thank you. I really enjoy the point that ESG investments are not only the right thing to do, but they're also beneficial for investors as well. Christophe, what is your view and your team's view on the role ESG will play in the asset management industry?
Yeah, no, I obviously I agree with all the points that Nina highlighted just now. And what I would like maybe add is our experience, Banca Mediolanum experience. We have 43 billion. Part of that externalized because we select managers, and so we have a good position. And in 2 aspects. First, to see the change within the market, and we've seen a lot of change, and that's very positive because we think it's 2 ways. First of all, it's people realizing that it's very important, and climate change is a very serious subject and needs to be tackled very quickly. And we see a lot of high-profile investor or manager chasing that and very vocal about that, and that's very important. As well, we recognize that a performance has been delivered by this kind of criteria to test as well. So that's very good news because it will obviously the trend to continue and to be confirmed. On our experience at Banca Mediolanum is that we manage to 43 billion, and our responsibility is to integrate ESG criteria and to have a significant impact. And we are taking that very seriously, because we say that if we can influence at the margin the 43 billion, or even more than at the margin the 43 billion that these clients manage for us, we think that it's going to impact trillions, because this asset manager manages as well money for other clients. And that's our responsibility. So we, the last few years, started to integrate more and more ESG criteria, and in particular, a few of the SDG designed by the United Nations. That's what we are pursuing, in of this criteria within our manager selection, within our investments, and pushing, asking the manager that we selected give us feedback about their progress, how they improve that in order to have a significant impact.
Great, thank you. And Charles-Henri, in your discussions with clients, is there something you would like to add on the ESG topic?
Well, yeah, I think that what has been mentioned is really true, and this is a trend that we are seeing already since potentially 18 months. Now, in every client discussion you can have, you're going to speak about ESG, you're going to speak about EU taxonomy and SFDR regulation, right? They are all asking all their providers, so the asset management companies, what they intend to do at the group level or at the fund level. So this is really part of our day-to-day life now, and I think that is going to take potentially 1 or 2 years of daily discussion with our clients to plan and to reschedule what we do. That's why, I mean, at Janus Henderson started to reinforce, of course, months ago, our resources in that space. We just hired a new head of ESG investments. We have appointed, so Paul Lacourcière. We have appointed global head of product and ESG strategy, which is Kelly Hag. So we are trying to combine the distribution approach and the investment approach into ESG to provide the best product to our clients. Saying that, we are not a new joiner in the ESG space. We manage one of the oldest funds in that space. We've got a global sustainable equity strategy, which exists since 1991. So far behind the SDGs or all the discussion we're having there. And I would agree with what Nina has said. Performance was an issue for many years. People didn't want to invest into ESG products because the performance was behind the benchmark. In that strategy, we benchmark against the MSCI World, which is a classic benchmark. And I can assure you that the performance are really strong on every type of period you can look at. We beat the benchmark 1 year, 3 years, 5 years, 10 years since inception. And we saw a very big acceleration in that trend in the last 12 or 18 months. And just as an example, we outperformed by 20% the MSCI World last year on that strategy. So I think this trend is going to continue, and it's probably, people want to invest better in asset management companies wants to do better. So I think there is a combined goal that will lead to more investment in that space.
Yes, I agree, and I think we're all excited to see a widespread integration of ESG in the industry. Now, do you think markets have already priced in a swift and global vaccine rollout? What risks do you observe as we continue to see the COVID-19 virus write its own story? Nina and Charles-Henri, I understand that France and Paris has been hit particularly hard, especially with this third wave and resulting lockdown measures. What is the current sentiment in Paris? Nina?
Look, obviously, it's very difficult to really judge what has the market priced in. Has the market priced in the massive unlimited amounts of stimulus driving down interest rates? Has the market priced in the light at the end of the tunnel, which is from time to time being clouded again and getting darker because we have lockdowns coming and going as well? Definitely having a more stable outlook on the vaccine rollout, having a second vaccine, like maybe the J&J announcement next week on a second vaccine, which is easy to handle and just needs one dose, will kind of put more support under the market. We remain over the next 12 months very constructive on the equity space, just simply because equities are relatively cheap towards other asset classes. However, definitely there are very volatile times ahead in the meantime.
Right. Thank you, Charles-Henri. Anything you'd like to add?
Well, that's a tricky question, right? This is the crystal ball, so we would all love to have the answer to provide to this one. I think that we've seen a lot of different countries trying to use different strategies against COVID. More lockdown, less lockdowns, curfews, all these type of things. No one knows which is the best one, honestly. I'm not sure a country is in a better place than another one, so I won't argue there. I think that, I mean, we don't have an house view at Janus Henderson, but we know that markets react in general very brutally to any news flow. So was the downside too brutal potentially in March? So that's why we saw a very big rebound. Is now that rebound too brutal again? Well, we never know. As mentioned by Nina, I think the news flow on vaccines will potentially continue to lead a little bit markets and the lockdowns. I think what is important is to have visibility on where we will be able to reopen the world, to soften the lockdowns, to travel again, and to work again in in our shops or boutiques or companies, and not working remotely from home. So I think that it's very difficult to say when it's going to finish. We saw Joe Biden saying he expects by end of this year, but I mean, I would love to trust him, and I think everyone would love to trust him, but I think no one knows yet.
Yes, that's a good point. We all know markets tend to swing from being too pessimistic to too optimistic. So, Christophe, do you think that markets are a little too optimistic, or do you share the optimism?
No, we are reasonably constructive at Mediolanum today. Obviously, there is pocket of the market that are quite expensive, and we know where they are. I mean, the technology benefited a lot of that. Price earning and 24 times in the US markets is reflecting a big portion of the technology in the index there. But we still have EM and Europe slightly cheaper, 16 or 14 time for EM, 14 time for EM. So there is some, and obviously within the market, some pocket of interesting things to do. So we are clearly in the race between the virus in one side and the vaccine in the other side. And we are still in the camp of thinking that the vaccine will win. Obviously, the timing can be much longer than we thought initially, but usually the financial markets tend to see quite on a longer time horizon, and that's as well at Banca Mediolanum what we emphasis to our clients to take a long-term view, and this is very important. And on that aspect, we think that there will be a lot of pent-up demand that will show up. I mean, there is 10% of consumption that is saved in the US, for example, just this year. So that will be spent at one point of time. Obviously, the fiscal and monetary support as well is very important all over the place. And that will create still an environment where interest rate will stay low for longer. And the equity risk premium is still, even though valuations are quite high, in some case, equity risk premium is still attractive. And if we can be exposed to a company that have a significant pricing power, you can achieve quite interesting performance over the long term. But obviously, it's always over the long term. And we definitely cannot exclude volatility. There will be volatility this year, and there will be drawdown. And it would, for us today, as of today, obviously we can change anytime with any new information, but today would be more an opportunity to buy if we have some liquidity than to sell.
Yes, okay, good point. And of course, with current extremely low rate environments, there's growth stocks tend to outperform, and there's a heated discussion on whether value is dead, and as growth companies just continue to outperform in today's conditions. What's your take? Is value investing dead, Christophe?
No, definitely no. I mean, value always matter at the end because on equity, it's a discounting mechanism for future return and future earnings. But having said that, obviously, there is part of the market that is definitely disrupted in this, and we see some long-term structural forces at play where tech is clearly changing the fundamental of in a lot of industries. So the difficulty of value managers, and we have exposure to that at Mediolanum as well, is to make sure that they are not exposed to this kind of segment of the market, and that's the tricky part because value investor tend to be driven by cheap valuation, and then we can find a lot of that in this kind of areas. But definitely I mean, today value it's a 45 year low versus growth in the main index if you take the US, and we are convinced that when the economy open up, there will be some kind of catch up economy sector that will catch up what has been a huge underperformance in the last few years, and in particular in the last few months as well.
Nina, I'm sure this is extremely relevant in your role as head of large cap equities, which many value companies tend to fall within. So what is your view?
Well, I think we have to define what we want to say when we say value. If it's a recovery story, let's say a company which was in a sector which was particularly hard impacted, but in itself it's a company with great management. Before COVID, it had great prospects. Then obviously I can agree with Christophe kind of saying that as soon as we reopen up, it's probably now you should have already in your portfolio. However, if we consider that a value stock is a stock which is either bad quality, which has already been a value stock for a very long time because it has no growth, then it's much more complicated to see a catalyst and a trigger for the re-rating. Particularly in an environment where ESG flows are becoming more and more important, large pockets of the so-called value sectors are not really the favorite or even sometimes excluded from these ESG funds. So I think you have to really distinguish on a stock per stock basis into what type of value you want to engage in right now.
That's a great point. Charles-Henri, anything you would like to add?
Well, from a client point of view, I mean, we can see that there is a small trend that clients are starting to invest into value. We saw that since maybe October, November last year, and this is a movement which is continuing. It's not a huge movement, but it's a small movement. I would agree. I mean, the point is now that value is so far away in terms of valuation from growth stocks that people are betting probably from a catch-up on this side, what Christophe has just mentioned earlier in the call. So I clearly think that we can see a continuing movement. The question we are asking ourselves, and when again, we don't have an hour's view at Janus Henderson, but the question we're asking ourselves is the world changing in terms of what does that mean value, what does that mean growth? That's also a question, because we are still staying on some words, but some growth stocks maybe will become some value stocks in the future, and some value stocks may become value traps in the future. So I think that what has been mentioned is right. We are here as asset management companies to avoid value traps, to invest into some good opportunities with potential of returns in the future. So we of course look at valuation, and we try to buy the stocks at a cheaper price than the market, and to sell them at a higher price to the market. So I definitely think that this trend will maybe is seen to continue, because the investors look at this space. But this is a tricky question, because we've seen this start and stop movement many times within the last 24 months. So we saw some starts from the value for a couple of weeks, 1 month, and then it stopped, and then came back again, and then it stopped. So we don't know if it is a long-term trend or just a short-term trend.
Yes, I think right now the challenge may be that for so-called value companies, is looking towards the future and seeing if their rather cheap price today means that they're facing an existential threat in the future, or whether they will bounce back. To finish, I wanted to ask a question to each one of you. What are your top 3 investment stories for 2021? Why don't we get started with Nina?
We have 2 European stories and 1 American one. All of these have been over the last couple of years in our carbon impact strategies already. Pick number 1 is Schneider Electric. It's just simply the rock star of the climate transition, which allows it through its energy efficiency programs to generate sustainable organic growth way above all of the industrial competition it has. Pick number 2 is a transitioning company. It's the newborn Stellantis, which is the merger of Peugeot and Fiat. It has currently attractive valuations. So talking about value stocks, maybe that is one wants to look at. It has just a brilliant setup of new models within the hybrid and the full electric space. And it has a very large array of car dealerships, which makes it really very sticky with its customers. And on the more American international side, we are going to stick with Microsoft, which is just the champion of the digitalization. It is already neutral in carbon via its own consumption, and it's now going to tackle as well the scope 3, meaning that they are going to generate own green electricity for every single emission which is created, whilst we are using via their products and emitting. So these are our 3 stock picks.
Great, thank you. Very interesting picks indeed. Charles-Henri, what about you on your end, Janus Henderson?
Well, on my end, I mean, as I said, we don't have an house view, so we don't really comment on specific stocks, but I will more talk maybe about our 3 strategies or asset classes that we are putting forward for 2021. We think that this ESG trend will continue. I mean, that's an easy point to say. So we are continuing to move forward in this space. We definitely think that picking the right stocks which are transitioning, which are helping the future of the world, will be the winners in the future. So we are pushing this. We do also have a global equity market neutral strategy, which is performing very well. We do believe that, as mentioned by Christophe and Nina, this is going to be a volatile year. So we think that having a good, I would say, long-short market neutral strategy to promote could help clients to have some returns, which this one had positive returns every year, even during the crisis. Last year they provided 6%, for example. So in case investors are feared by the market. And mainly, the last one I will highlight is European equities. Clearly, we see a trend towards European equities starting back. I mean, a lot of investors favoritize in the past US equities versus European equities, but now we are seeing a little bit change there. Potential investors think that European equities are the valuation is a little bit lower than the US one. So we think that there could be a comeback into European equities.
Thank you, Charles-Henri. And Christophe?
Yes, no, if we take a bit more, as usual, view, we think that we still think that the risk assets will be higher in 12-18 months time, with some volatility, obviously, but still, so we are quite fully invested today. The second one is that we are convinced that the active manager should have a better time this year versus more passive one, and with the broader exposure of the market to the performance in the context of in the economy reopening, and a broader participation of the market. And the third one, if we take a slightly shorter term view, is that the type of sectors or strategy that we favor in the portfolio, without a big bias, but still slightly favor. Is more on the cyclical kind of theme, small mid cap as well, and emerging markets as well. So that's the three element I wanted to mention today: long term and a bit more short term as well.
Great, thank you. Well, I'm sure like everyone watching, is taking notes of your valuable insights, so thank you very much. Nina, Charles-Henri, Christophe, thank you for your time and insights. It's been a privilege to discuss these topics with you. And congratulations again on your awards. And thank you to everyone who joined us live for this first edition of the RankiaPro Europe Awards ceremony. We look forward to having you at our upcoming RankiaPro events.